Good morning, everyone. Let's get started. I know there's still a lot of people who are signed up to join us, but in the interest of making sure that we respect everybody's time, let's kind of jump into this. Hey, hopefully everybody's doing well. I'm Ken Cerini. I'm the managing partner of Cerini Associates. I'm joined here today with my partner, Tania Quigley. We currently work. Hey, Tania. We currently work with approximately 300 nonprofit organizations and are one of the top 10 firms working with nonprofit organizations in the New York metropolitan area. I'm not saying this as a commercial for the firm, but I really want to stress a point here. We meet with a lot of boards and audit committees during the year. And while we do have audit committees that totally get it, audit committees who open up an effective dialogue before, during, and after the audit. They ask pertinent questions about the organization and its operations. They understand industry-related issues and concerns. They're focused on risk, both external and internal risk, and they dedicate appropriate time to our meetings and discussions. They seem to be the exception. We have way more audit committees that we meet with that seem to take their lead from management or us, their auditors, and don't really seem to understand what the true purpose of an audit committee is and how important it is to the overall control and governance of a public charity. CNA prides itself on adding value to relationships and feel that we have a responsibility to help educate the sector, because after all, we don't know what we don't know. As a result, we put together this 3-part bootcamp in an effort to make audit committees a little more informed as to what their responsibilities are and give them some insight into how they can make the process more meaningful and effective. Today, we'll be doing an overview of the audit committee, its responsibilities, why the audit committee is important, who should be on an audit committee, and more. Today's session kind of lays the groundwork for the next 2 sessions that we're going to be having. The next one on April 13th is the committee's role in the audit process, where it's going to be looking at things from interrelationship with external auditors. And then on May 5th, we're going to be looking at internal communication and understanding risk, which is going to be more of a internal focus of the audit committee in terms of how it interplays with the organization and the key employees within the organization. Before we get started, I want to lay the foundation for you as to why the audit committee is so important. It all comes down to public trust. Much like a publicly traded company that relies on investments from the general public to provide its equity base, a public charity relies on money coming from the general public through donations or government funding, which in essence is public money because it's taxes. The government gets its money through taxes and fees paid by the general public. It is important for the general public to know that the funds that are going to the nonprofit are being utilized for their intended purpose, that the nonprofit is effectively utilizing the funds to maximize the benefits the organization provides to the community. The organization is following its mission. The organization has effectively established a control environment to safeguard its assets and ensure that there's proper financial and other reporting so that the general public has a certain level of trust and transparency. The organization is complying with laws and regulations, which is important, and the organization is managing risk appropriately. And again, that's where the audit committee comes in, because these are a lot of the roles that the audit committee needs to take into play. The use of an independent auditor who understands the nonprofit sector and equally importantly, the funding streams and operations of your particular nonprofit under the supervision and oversight of an effective audit committee helps to ensure the public trust is being met. In order for the process to work, however, there needs to be open dialogue, and the audit committee needs to have the ability to understand and assess the effectiveness of the external audit and the internal risks that lie within the organization. I'm sorry to say this, but the role of the audit committee should be a year-round role and not just a quick 20-minute meeting or phone call with the organization's audit to check a box on the 990. Again, unfortunately, too often we see that audit committees, don't get it, and they should. We're hoping that after you go through the audit committee bootcamp, you'll have a much stronger understanding of your role, the questions you should be asking, the information you should be seeking, and how you can truly help the organization to serve, protect itself and ensure that it's doing what it should be doing from a fiscal, operational, and compliance perspective. The fact that you're here today means that you're ready to become a more effective audit committee member. I thank you for that. As auditors, we enjoy the opportunity to work with audit committees collaboratively in an effort to mitigate risk and lessen the likelihood of noncompliance and government takebacks. If you have fellow audit committee members that weren't able to make it here today, we're going to be recording this, and we're going to be putting it up on our website so that you can share it with your other audit committee members, board members, whoever else you feel might find this useful. Before we get started, we'd like to understand who is here today. So we're going to pop up a poll question. So if people can take a second to answer what role you play with respect to the nonprofit organization. So if everybody can kind of fill that out, we'll give you guys a couple seconds to fill it out, and then let's see who's here. Okay, let's see what the results are. So most of you are staff members working within the organization. Okay, so that's great. So you can take back this information and share it with your audit committee members. We have very few audit committee members here. Hopefully in the next 2 sessions, you guys can try to get your audit committee members to come. And we've got about 20% of the people here are board members and about 13% other. If you have any questions throughout the course of the presentation, please feel free to post them. Please post them to the Q&A. It's a lot easier for us to see them in the Q&A than it is for us to see them in the chat. So again, if you have questions, please post them in the Q&A, I'm sorry. We'll get through as many of them as possible. Sorry for the long introduction. So let's kind of dive into the material. Tania, why don't you take it over?
Okay. Before I get started on going over the legal aspects of an audit committee, I just want to pose a question to everyone in the Q&A. So my question is, how does the organization handle their audit committee functions? So there's a few options to choose from. Is it part of your board, where the board functions as the full audit committee? Is it part of your finance committee responsibilities? Do you have a separate audit committee with just board members, a separate committee with board members and outside members, or if there's another form of, another type of form that your audit committee is made up of?
We'll give you guys a couple minutes to answer, and then we'll see what the responses are. Okay, let's see what we got.
Okay, so most of those on the call have audit committee with just board members included. So the board members function as the overall audit committee. You have the next is the board functions. I'm sorry. Most of the attendees have a separate audit committee with just board members included. Followed by that is the board functions as the audit committee. And then it's the finance committee also serves as your audit committee. And then 8% have a separate audit committee with board and outside board members. Okay. So getting into legal aspects of an audit committee. So the New York State Nonprofit Revitalization Act of 2013, it became effective as of July of 2014 for New York State nonprofit organizations that are registered with the New York State Charities Bureau. And that's required for nonprofits that solicit contributions within New York State. The Act had several provisions in effect for the nonprofits to follow. And one of those provisions is having a designated audit committee when the organization is required to have an audit. The audit requirement is set by New York State when the organization earns $750,000 or more in revenue. And then that's the current now. And then as in 2021, the threshold will increase to $1 million in revenue to have that audit requirement. The audit committee is a committee of the board. So that means it's an extension of the board. It operates under the authority of the board. It's made up of at least 3 independent board members, and we'll go over what an independent board member is on the next slide. It can also have an additional non-voting members, non-voting independent members of that. The organization's bylaws should include the audit committee as a standing committee. So the organization should review their bylaws to make sure that this is included in there. If not, whether the organization was not subject to that audit requirement, but is now, they should really look at your bylaws to make sure that the audit committee is mentioned in there. It could be set up as a standalone committee, or like we said before, it could be incorporated with the finance committee, or make it the full responsibility of the board. However, the organization best fits for them to set up this audit committee, it should be documented in the bylaws. The charter should outline the responsibilities of the audit committee. That's something that should be developed to be able to provide those that are involved in the audit committee what their roles and responsibilities are. It gives them the clear understanding of what their responsibilities are, who they have to interact with within the organization, outside the organization. And then we'll go over the more details of that in the next few slides as well. And then this charter should be reviewed and regularly updated, at least on an annual basis, so that it best matches the needs of the organization.
A couple other quick things. Tanya mentioned that that the audit committee could have non-voting independent members. Just remember that if you have non-voting members on your board, on your audit committee, they have to. You should make sure that the non-voting members are not individuals who are responsible for maintaining and developing financial controls within the organization. So you really don't want to be including some of your fiscal staff and stuff like that as part of your non-voting independent members of the audit committee, because again, they wouldn't really be independent. You have to make sure, I mean, a lot of organizations, what they'll do is when they're looking for those non-voting independent members, they'll bring in members of the community who maybe have some background on accounting or auditing that'll can help the other board members digest some of the information that's being produced as part of the audit committee. And then the only other comment I wanted to make is, again, when you're looking at incorporating it into another committee or the board, if you do have individuals, and as Tanya said, the next slide, we're going to be going over what an independent board member is. But if you do have individuals on your board who are not independent, they should not be involved in any deliberations and vote. So you have to be careful that if you are going to be including the whole board as your audit committee, that there might be some members of that audit committee that may need to leave the room or not be involved in the vote process because they are not independent. So I'm trying to get the page down to work. There it goes.
Okay. So an independent director is someone that is not in the past 3 years been an employee or key person of the organization or any of its affiliates. And a key person is someone that had overall responsibility of the organization. They have the authority to exercise power or give substantial influence over the decision-making of the organization. And then that would also include someone who's been in that a management role of the organization as well. The independent director would be independent if they have not received over $10,000 in compensation from the organization in the past 3 years. And does not have a relative who has been a key person or has received $10,000 or more from the organization over the past 3 years. The director will still be independent if they have a relative who is an employee of the organization, but they just can't be considered a key person.
And when Tanya talks about that $10,000 from the organization, that doesn't include like reimbursement of expenses and stuff like that. That would be compensation for services such as an employee or an outside contractor or something like that.
Right. And to be sure, so I just want to go back real quick. I just want to say that a way to be sure that your directors are independent, the organization should have this conflict of interest policy in place. That is also one of the requirements of the Nonprofit Revitalization Act, is to have this conflict of interest policy in place. It outlines what constitutes a conflict of interest. Each year, the board members should sign conflict of interest statements, identifying anything that may be a potential conflict of interest. this would also be filled out as they first join the board also. So having a well-documented policy in place and this procedure in place will help identify to make sure that these directors are independent that are on the audit committee.
Yeah, one of the things that we advocate from our clients is that they do a very proactive conflict. And as Tania mentioned, that it gets signed every year. A proactive conflict of interest would be one where they outline upfront who their potential conflicts are and what organizations or companies that they have conflicts with, so that that's all laid out up front, so it's easy to monitor.
Okay, the next two slides go over the purpose of the audit committee. So the first purpose here is to evaluate risk within the organization. There's internal and external risk. Internal risk could include any IT issues that can expose the organization to data theft or loss. There's risk of fraud within the organization. There's risk of any potential lawsuits. Is there a lack of segregation of duties that will expose those risks to occur? There's also external risk, which is risks, outside of the organization. They're kind of outside of the control of the organization. So the economy is a factor in how the organization is funding. So if most of their funding is through government sources, the economy could play a factor in potentially, getting those funding sources reduced. Contributions is also another one.
If you think about what's happening right now with the whole COVID pandemic, this is a clear, large external risk that's impacting everybody, every company, every nonprofit, and this needs to be kind of incorporated into that thought process.
There could also be changes to government policies, laws, and regulations that can impact the organization, how they receive their funding as well. So those are just some examples that the audit committee should be aware of and be able to assess on how it impacts the organization. So once those are identified, the audit committee should develop a plan in place to help protect the organization from being impacted by those risks. Another purpose is to select an independent certified public accountant to perform the audit of the financial statements. The audit committee will oversee the audit process from start to finish, and then review and approve the audited financial statements. The audited financial statements also includes if the organization is required to have a retirement plan audit for its 403B plan, 401k plan. So the audit committee should have involvement in the selection of the CPA to perform that service, as well as evaluate the results of the audit. Another purpose is to evaluate the auditor's findings. So if the auditor has recommendations to improve internal controls over the process, or the process is based on their audit procedures, this should be communicated directly to the audit committee, and then the audit committee must be able to determine if these improvements are feasible for the organization to implement, as well as be able to understand their findings. The auditor may also have proposed adjustments based on their audit, and the audit committee should be able to understand and evaluate those adjustments. The audit committee should include members that can take responsibility for the accuracy of the audited financial statements. Those individuals should have a basic understanding of the financial statements and that they're presented in accordance with accounting principles generally accepted in the United States of America, US GAAP. The auditors, most of the time the auditors will prepare the financial statements for their clients, and then the organization must be able to have individuals with the skills, knowledge, and experience to be able to take responsibility of those financial statements prepared by the auditors to make sure that they understand them, that they're accurate and in accordance with US GAAP. The audit committee should have an understanding of the internal controls of the organization. The internal controls are most common to ensure that there's proper handling of cash receipts, cash disbursements, payroll and HR related functions, and anything else that's significant to the overall operations of the organization. The audit process, again, from start to finish, they should be able to monitor that process to make sure it's that they have, communication with the CPA throughout that process. They should also be able to be aware of any changes in reimbursements and compliance related issues. So does the audit committee understand that if there are any changes to funding and any compliance requirements that are in place by that funding source, that that compliance requirements are being met by the organization? Sometimes the organization could have an internal audit function. So the internal auditors of the organization will be communicated directly with the audit committee. And so that process should be monitored by the audit committee. So the audit committee, the internal auditor, will review and develop any kind of testing of the internal auditors to make sure that, and evaluate the results of those tests as well.
A couple of things I want to kind of touch on that Tania talked about. So in the selection of the independent certified public accountant, there's criteria that you should be establishing and looking at. So you should consider things like the firm's reputation, how much does the firm do with respect to the nonprofit sector, and more importantly, maybe the funding streams that you have in place. What do their references look like? What area of specialization? What's their fee structure? Is there staff continuity? What's the expected timelines? What are the deliverables? What other benefits they offer? So you really should be kind of evaluating it from an overall ability perspective. You should also, and any firm that's going to be bidding on your work should be able to provide you with a copy of their peer review letter. Every accounting firm has to go through a peer review who does audits, who provides any level of attest functions, has to go through a peer review every 3 years. We actually just completed our peer review this month. So you go through this peer review process, and it basically has another accounting firm looking over the work that you're doing to ensure that you're doing quality work and coming to the right conclusions and documenting everything we're supposed to be doing. So just like you go through an audit with a certified public accountant, we as accountants go through an audit too to make sure we're doing the right type of work. And there's a peer review letter that gets issued saying whether we're in or not in compliance. So I think that's important for you to look at as an audit committee member, to see that that peer review letter is there and that it's a clean peer review letter. Also, you can do a Google search or whatever and just find out any lawsuits, any sanctions against the firm, anything that could impair or reduce the effectiveness of the accounting firm. So that's something that you might want to look at. Another thing is, Tania mentioned that it's important for audit committees to really understand changes in reimbursement, compliance issues, accounting issues, all of that stuff. So it's really important for the audit committee to stay on top of things. There are several ways that you can do that. A lot of the funding streams have kind of a listserv that you can get on. So if your organization is predominantly funded by the Office of People with Developmental Disabilities, you can go and get on the listserv for OPWDD and get a listing of any changes in regulations, so it's a daily or weekly update as to what's going on, so that you can kind of keep abreast of what's happening. A lot of the organizations that you guys are on the audit committee of, or you guys are working with, belong to trade associations. You can ask the organization to forward to the audit committee any key information that's being pushed out by the trade associations that is pertinent to the audit committee. Most accounting firms that are working in the nonprofit sector do webinars or seminars or produce newsletters. Get on the mailing list, review those newsletters, come to webinars and seminars so that you're the audit committee is kind of more informed as to what's going on and what some of the changes are. The more knowledge you have, the more effective you'll be as an audit committee member. Tania?
Yep. So organizations that have that receive at least $500,000 or more in Medicaid funding should have a quality assurance or Medicaid compliance function in place. The audit committee should interact directly with the Medicaid compliance officer of the organization, regularly meet to discuss any concerns, any risks or findings that was brought to the attention of the Medicaid compliance officer. The audit committee should receive and consider actions to recommend to the full board as a result of the recommendations from the auditors about any actions the nonprofit should take to improve its financial performance and management practices. So again, after the results of the audit committee will be able to review their findings, adjustments, any recommendations. Once there's an understanding between the CPA and the audit committee for those recommendations and adjustments, audit committee will then recommend to the full board to accept and implement those changes. The audit committee should handle complaints about financial mismanagement. So the audit committee should have a direct communication with any source of where someone could either make aware of any financial mismanagement. So is there any speculated fraud or misallocation of the organization's assets that someone has become aware of? Is there any issues, like I said before, with Medicaid compliance? And then once that's identified, the audit committee should perform its own investigation into the matter, as well as to get any kind of professional services regarding that to help them handle those complaints. The audit committee should review audit reports from governmental audits and funding sources. So again, nonprofits that receive government funding are also subject to governmental audits. These are compliance audits, for example, uniform guidance, when they spend $750,000 or more in federal funds. These organizations are also subject to financial and program audits by the funding source itself. So the audit committee, they have the responsibility to oversee and accept the results of those audits. And again, communicate those audits and findings to the full board. The audit committee should also evaluate and work with management to implement a plan to address any of the findings as a result of those audits and monitor the plan to ensure that it's being properly carried out. Conflict of interest, as we said before, the entire board, management of the organization should be completing those conflict of interest statements on an annual basis. They should review the conflict of interest policy to make sure it's in line with the Nonprofit Revitalization Act. And then once any conflict of interest are identified, ensure that those are properly being handled. The audit committee should monitor legal matters that could impact the reputation and financial health of the organization. Again, the audit committee should be able to have an open communication to where they are made aware of any legal or potential legal matters of the organization. So again, also having direct communication with legal counsel, to help reduce the risk of any legal matter once that has become brought to their attention. The audit committee should review insurance loss experience runs. So any claims submitted to the insurance company over in the past few years they should be able to review those to see if there's anything that they were not aware of. So reviewing these reports will provide for any insurance claims for them to, if they were unaware of them, they could be able to investigate as to why there's being claims made to the insurance company. Reviewing self-reporting to the Justice Center. The audit committee should be able to find out if there's any instances of reporting on behalf of the organization. If that's the case, the audit committee can further investigate into that self-reporting. And lastly, to review insurance coverage limits and adequacy. So the organization must have proper insurance to protect itself from, any kind of instances. So for example, the directors and officers insurance is something that should be required by all organizations. There's general liability insurance to cover any property damage. There's also IT insurance, to protect the organization from any data loss. And there's also the fidelity bond requirement. So if you have a retirement plan, you're also required to have a fidelity bond. So each of these types of insurances, the audit committee should make sure that there's sufficient coverage that applies to them. So, because there's the risk if they don't have an adequate or appropriate insurance policies in place, it can open up the organization to, risk of loss should an event occur that the organization does not have the right insurance or the right coverage for that. Ken, is there anything you want to add to any of these?
Yeah, I mean, one of the things, if you think about it from an overarching perspective, it really comes down to what risks exist within the organization and how can the organization, through the audit committee and management, mitigate that risk. And that's kind of the overarching question as you kind of going through this whole thing in terms of why the audit committee is there and what the audit committee's purpose is. So that's something that, when you're kind of looking at the different functions and what the audit committee is designed to do. And you can see there's a lot here that the audit committee is responsible for. It's not just, meeting with the external auditor once a year. There's a lot of different things that the audit committee should be involved in. Tania talked about, how often the audit committee should meet. We actually like to see the audit committee meeting at least on a quarterly basis, so that the audit committee can really address all of these points. And again, there's a lot here for the audit committee to think about. When you're thinking about, the insurance loss runs and making sure and reviewing that, the organization has proper insurance limits in place, that the organization is properly managing risk. If you're seeing a lot of accidents occurring due to individuals tripping or falling, or maybe workers' compensation claims and things like that, maybe there's some education that needs to be taking place within the organization to lessen the number of incidences. That could also happen if you have a lot of reporting in the Justice Center. Maybe there needs to be some changes within how the organization operates in order to mitigate and lower some of that risk. So again, it's not just about, looking at reports and seeing what's happening. It's about addressing it, coming up with corrective action plans throughout, and working with the organization to improve the overall environment that exists.
So I went over most of the purposes of the audit committee. So if anyone wants to post in the chat, if there's any responsibilities or functions that the audit committee is handling that we didn't cover, we welcome you to share that.
Yes, if anybody wants to throw into the chat some of the other things that their audit committees are doing, or some of the things that they're seeing from their audit committees that maybe some other purposes that we didn't discuss. We'll give you guys like a couple seconds to throw some stuff in here. Don't all respond at once. Or did we do like such a great job of covering absolutely everything that nobody has anything to add?
Covered a lot.
I think it's early in the morning. Tania, I think people are still sleeping. All right, so I guess we got everything covered because nobody has anything they want to throw into the chat in terms of additional items. All right, so let's just move on. All right, so before we kind of get into the responsibilities of the audit committee, actually Laura English threw out cybersecurity. Yeah, so cybersecurity, I agree, Laura, that cybersecurity is a key focus. I mean, when you're dealing with the whole aspect of IT and the fact that people are working more remotely today than ever before, there's an additional need for ensuring that the right protocols are put in place, that all the patches are being updated, not just within the organization, but also maybe on the machines that people are using at home. So yeah, cybersecurity is an extremely big issue. It's something that we've been focusing on a lot. Cybersecurity is something that we're going to be discussing at our annual nonprofit update in June. And cybersecurity, we already have done one panel discussion on cybersecurity, and we have another one coming up next month. So again, watch our website for information. But yeah, cybersecurity is a very, very large issue that's happening right now. And that's something that audit committees should be paying attention to, because when you think about it, IT is so pervasive in everything that we do within organizations that it's important. And Kelly actually just posted in the chat the link for the cybersecurity webinar. If anybody wants to register, they can kind of click on that link and register right away. So I want to get, before I kind of get started into the responsibilities of the audit committee, I want to throw up another poll. So when does your audit committee meet with your auditors? As we said before, that's kind of important, or an important role of the audit committee is to meet with the auditors. So when do you guys meet? Never, before the audit only, after the audit only, or before and after the audit? So we'll give everybody a couple seconds to answer here. Okay, what do we got? So 76% of you are meeting before and after the audit. That is, that's the right answer. As Tania mentioned earlier, that's when you should be meeting with your auditors, before the audit to kind of go over some stuff, and then after, and I'll kind of talk about that in a couple seconds. 24% are saying they're meeting after the audit only. I like the fact that nobody said never. So that's good. We like the fact that the audit committees are involved with the auditors, because that is a primary function of what they do. But for those that said after the audit only, again, you may want to think about looking at that from a pre-audit perspective too, because it is something that is required by the Nonprofit Revitalization Act. So let's talk a little bit about the responsibilities of the audit committee. So the audit committee is responsible for, as we talked about, selecting the qualified independent certified public accountant to perform the financial statement audit. This includes the sending out of requests for proposal. Typically, it's management who sends out the request for proposal, but the audit committee should understand what's going to be included in that request for proposal. They're also responsible for evaluating the effectiveness of the firm performing the audit. We see a lot of times that, you know, price becomes an important consideration in terms of who gets selected. And yes, price is definitely an important piece. But we actually recommend that you, as an organization, develop a scorecard where you have a rating system pre-established. So when you're going through and you're looking at an audit firm, and I mentioned some of this before, but look at things like industry experience, how well or how important or how significant is the industry overall, and what's that level of expertise they have within the industry. Talk to their references. You know, most accounting firms, or your RFP should require the accounting firms to provide a certain number of references. Talk to the references. Find out how responsive the auditors are, what the audit process is like, how thorough they are, what information they provide, what does the reporting look like, what does the communication with the organization and the board look like, what do their presentations and proposals look like? I mean, we find that some of the RFPs are now asking for auditors to please include within the RFP a sample copy of what their presentation is going to look like, so that organizations can really gain a better understanding of what that looks like. Pricing structure, again, as I said before, pricing is an important component, and it should be part of the factor, but not the deciding factor. And then what other factors are important to the organization? So that's something that, you know, when you go through that process, I think it's important. In accordance with the Nonprofit Revitalization Act that we've been talking about, the audit committee is required, as we talked about before, to have a meeting with the auditor prior to the start of the audit and after the completion of the audit. And that applies for any organization with $1 million or more in total annual revenue. So that pre-audit meeting, you should be looking at things like the audit process. So what is the audit process going to look like? What areas are the auditors going to focus on? Where's the risk within the audit that they see as auditors? And here's your ability. Remember, as an audit committee member, you should be really focusing on risk, and you should be doing your own assessment of risk within the organization, either through your internal auditors, through management, or on your own. Here's your ability to have that open communication with your auditors. Here's your ability to have that discussion regarding the risk areas. And there might be additional areas that the auditors weren't thinking about that you want the auditors to look at, because you have a different take on it, or you feel that's important. So again, this is where that dialogue occurs between you and the auditor to kind of understand and make sure that the risks that you see within the organization are being properly addressed within the audit. Also, as part of that initial meeting, there should be a discussion regarding independence issues. The auditors are going to be doing certain non-attest functions. As Tania mentioned, it's often that the auditors prepare your financial statements. The auditors typically prepare the tax return, your 990 and your CHAR 500. The auditors may propose journal entries. There might be, you might be using your auditors right now to help with some CARES Act consulting. So all of these things are non-attest functions, and it's important to understand how these non-attest functions impact the auditor's independence with respect to the audit. So there should be some discussion regarding that. What do the services look like? What are the extent of services? What's the role of the auditors versus the role of management, and who's taking on what responsibilities? What's the timing of the audit? All of these things should be discussed as part of that initial pre-audit meeting. And it doesn't have to be a long pre-audit meeting. It could be relatively short. I mean, we typically see they last maybe about a half an hour. But again, there should be that open dialogue. It also sets the tone for the audit and ensures that the auditors and the audit committee know that they have access to each other throughout the process. The other responsibility of the auditor is to review and approve the results of the audit. So when the audit is over, we talked about pre-audit, now it's after audit, the auditors are going to produce certain documents. The auditors are going to produce the audited financial statements, and it's important for the audit committee to review those financial statements and, again, ensure that they properly address the organization and the organization's operations. If the organization has any material weaknesses or significant deficiencies, the auditors are going to produce a management letter. It's important for the audit committee to understand what's in that management letter, why these issues are there, what caused the issues, and who within management is responsible for correcting the issues, and what's management's plan for that corrective action. And the time frame as to when that corrective action is going to take place, so that the audit committee can, in essence, monitor these are the findings that we had, here's the issues, how are they being addressed, and have they been properly addressed? And then they should bring it back to the auditors when the auditors present in the initial meeting the following year. Have you done any procedures, or if it's not in the initial meeting, at the end of the audit of the following year, were all of your management letter comments that you came up with last year properly addressed by management? If not, what's next steps? Any restrictions on the scope of the auditor's activities or access to requested information. So again, were the auditors given free access to information? Were there any limitations on access to information? We've run into a situation because of COVID this year where certain documentation has been kind of locked up in offices where the client really doesn't have access to because they're in a building that's been closed down by the landlord. So you're in a situation where there might be some limited access to information, and what did the auditors do then to get around that limited access to still ensure that they gain comfort over information? There's certain required communications. It's called the SAS 114 letter. That's another thing that is delivered by the auditors, and in there, there's going to be a discussion about the policies that the organization has, and if there have been any changes in policies. Any significant disclosures that exist within the financial statements. This year you have the CARES Act and CARES Act funding that's been big. You have the impact of the pandemic on the organization. So these are all things that are going to be new in terms of your financial statements. When I talked about changes in policies, there are some new accounting policies that are coming down the pike that deal with the recognition of revenue and the treatment of government grants by as contributions or exchange transactions. So these are things that are new. These are some of the stuff that you should be talking over with your auditors on either a pre or post basis. Are there going to be any new pronouncements that are going to be adopted during this current year? What impact do you expect them to have on the financial statements? So that, again, you can kind of understand that. And then any material or past adjustments get discussed. So there's a lot of stuff that goes into that required communication that's, I think, important for the audit committee to understand. Any significant disagreements with management, one of the things that management maybe to leave the room so that there could be candid, open dialogue between the audit committee and the auditors, so that if there are any issues or any concerns that need to be addressed or discussed, they can get addressed and discussed without the management in the room. Once the financial statements are approved, the audit committee will present the audited financial statements to the board. So some organizations have the external auditors present to the board, and some organizations, just after the audit committee gets the presentation by the outside auditors, the function at the board level is a lot smaller or shorter, where the audit committee just presents a summary of the presentation that the auditors did to the board. So it can be done either way, but it's the responsibility of the audit committee to present to the board the audited financial statements and audit result, and whether they do that themselves or whether they utilize the external auditors to do that is up to them. And then another responsibility is the 990. So you have the 990 that the auditors produce, or the accounting firm produces, and it's review of that 990. Now, a lot of that financial information that's in the 990 is the same financial information that's in the financial statements. So that should be a little bit easier to review. But again, the 990 does contain questions regarding does the organization have an audit committee, and what's the review process of the 990? So this can help you get through some of those responsibilities. So I know there was a couple other things that are popped into the questions. One, Peter Desmond said that part of the responsibility of the audit committee is to review and approve the 990, which is what we just talked about. Someone asked if we have a sample of an audit scorecard that they can share, that we can share. We don't. We can see if we can find one for you, and if we can find one, we'll send it out to everyone else. If the board authorizes the audit committee to approve the audited finance statements, is there any legal requirement for the full board to do so also? Remember, your audit committee is a committee of the board. As a committee of the board, your audit committee has the ability to bind the organization. So if the audit committee is approving the financial statements, there's no requirement for the full board to review the financial statements also. Again, there should be a report by the audit committee to the board to review those financial statements, but it is a committee of the board, so there is not a requirement for the full board to look at it also. Are the expected changes in law discussed with the audit committee or via the CFO, and then does the audit committee inform the rest of the board of these changes? If there are legal changes that are taking place within the organizational, the industry that the organization works in, so if there are new changes to accounting regulations, if there are new changes to legal requirements such as a Nonprofit Revitalization Act, if there are regulatory changes, all of that stuff, since the audit committee is responsible for risk, and the audit committee is responsible for understanding risk within the organization, all of those things should be communicated with the audit committee. Whether the audit committee does it themselves, as I said before, through listservs or any of those types of things, or whether that's information that's pushed from the organization to the audit committee, or the audit committee is getting information from the external accountants or whatever. But it is important that the audit committee really understands what those changing risks are, which includes external factors, as Tania mentioned, which includes changing regulations, even things like if there are, Tania mentioned external audits by governmental agencies before. So you could have an OMIG, Office of Medicaid Inspector General audits that are taking place, or Office of State Controller Office audits, or funding source audits that are taking place. You can go onto any of the websites for the OMIG or the OSC and really take a look at what sort of findings they've been having on audits that they've been doing within the industry that your organization serves, and kind of look at that and use that as a way maybe of checking with management, checking with your internal audit function, checking with your quality assurance function to see that these types of issues that are being addressed within these governmental audits are being properly handled within your organization. So again, there's a lot to think about here, and there's a lot of responsibility that comes within the audit committee. One of the things that actually, let me throw up before I get started on this. Let me throw up another poll question. Just interested in understanding how often audit committees meet, because as I said, there is a lot of responsibility here, and I'm just curious to know how often the organizations are having audit committee meetings. So if you can take a couple seconds to kind of answer this. I feel like I should be doing the do 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 do. Okay, what do we got? So 31% are meeting 4 times a year. As I said, I actually like for audit committees to be meeting at least quarterly. So 37% or more than a third of you are doing that. You've got 19% 3 times a year. That's not that horrible. Once a year is probably not enough for an audit committee to be meeting in order to be able to meet its obligations that we've spelled out here. There's a lot of stuff that an audit committee needs to do. And meeting once or twice a year may not be enough time for them to do it. So I laid out kind of like a quarterly schedule in terms of what I kind of think would be good for an audit committee to be doing each quarter. And I know this sounds weird, but I'm actually starting with the third quarter of the year instead of the first quarter of the year, because I want to kind of start with the whole aspect of the auditor, because that again is a big part of the audit committee. So in the third quarter of the year is when you should really be thinking about reviewing your current audit situation, determining whether you want to go out to bid, approving the current auditor, or going out to bid and starting the process of selecting a new firm. Because the auditors are going to need enough time. You're going to need enough time to go through the process. Auditors are going to need enough time after they've been selected to gain an understanding of the organization to get a timely audit done. So you want to make sure that there's enough lead time for all of that to take place. So you really want to start that process in the third quarter. If you do have a significant Medicaid funding, the board and audit committee should go through compliance training. So that compliance training should probably take place in the third quarter of the year. If you have an internal audit function, or if you have a compliance auditor, as I said, because you have a high level of Medicaid funding, or maybe you have a compliance auditor because of some levels of state funding or uniform guidance because you have federal funding, you should be meeting with them on a quarterly basis and get a report from them. So that should be taking place at the third quarter meeting. If the organization is required to have a pension audit, somewhere in the third quarter is probably when you're going to be meeting with your auditors regarding your pension audit. And the number of employees or number of participants, I should say, not employees, number of participants that triggers a pension audit is 120. And that number of participants includes employees who are eligible to participate in the plan. It also includes individuals who have left the plan, who have left account balances and stuff like that. So that's something that in the third quarter is when we typically see the meeting with the auditor with respect to the pension audit. I can tell you we do about 40, Tanya, about 40 pension audits we do.
Yep.
And I think we meet with audit committees on 2 or 3 of them. It's an area where the audit committee really doesn't take an active role in, audit committees or boards take an active role in. We feel that there should be a much more active role in that process. In the fourth quarter of the year is where you should be doing your pre-audit meeting with your external auditors that I talked about on the last slide. Discussion of any new audit regulations and pronouncements. Again, that could be discussed with your external auditors. What new regulations are coming down the pike? What do we need to worry about? What are we going to be adopting this year? information risk, technology discussion. This is security risk. Here's where your cybersecurity discussion is going to come into play. If you have an outsourced IT group or an internal IT, you can invite them to the meeting to discuss this stuff. Meet with the internal auditor, again, on a quarterly basis, your internal auditor or your compliance officer, and then review of insurance loss experience runs. You typically want to do that at the end of the year to see how your loss experience is happening for the year. In the first quarter of the year, you want to meet with your internal auditors if you have one, and that's where you're going to do your actual risk assessment. If you don't have internal auditors, then you should be meeting as an audit committee and management and deciding where the risks within the organization. What do those risks look like? How do we need to address those risks during the course of the year? You should be meeting with, again, your compliance officer, QA function to discuss risks and approach and findings. Should be looking at organizational risk and internal controls. Again, that's something you look at with management, maybe review the policy and procedure manual of the organization. And then in the first quarter is where you gain an understanding of what the potential conflicts are and make sure that you know where the conflicts are and make sure that you got those annual conflict statements coming back. In the second quarter, you'll be meeting with your external auditors regarding the results of the audit. You'll discuss potential audit findings that came up during the audit. You'll review the 990. You'll have a discussion regarding operational matters. You might want to have some of your program directors come in and talk a little bit about some of the key risks within some of the operational areas that they're seeing. And again, on a quarterly basis, you're meeting with your internal auditor to make sure that things are being handled correctly. And then throughout the year, and you can kind of decide where these things should be placed. But you got things like, Tania mentioned the Justice Center reporting. So if you have any instances or incidences, those should be discussed at the meeting when those incidents occur. Reviewing of your insurance coverage will happen a quarter before you're up for renewal. Ongoing monitoring of legal matters. So as legal matters pop up, those should be monitored on a regular basis. Any audits, as we talked about, audits of funding sources should be talked about as they arrive. So if someone's coming in for an audit, there should be a discussion about it at an audit committee and what the management has in place to handle it. And then any discussions of changing regulation should be happening throughout the course of the year. One of the things that's important also is for the audit committee to maintain minutes. You're really supposed to be maintaining minutes of meetings. So each audit committee meeting should have minutes attached to it. You need to have a quorum of your audit committee because, as I said before, your audit committee is a committee of the board. So if you don't have a quorum, you can't make any binding decisions on behalf of the organization. So you want to make sure that your audit committee is of an appropriate size that will allow you to have a quorum. And remember, the only voting members of the audit committee are board members. If you have outside members, they can provide insight and information, but they are not voting members of the audit committee. They can't bind the organization as outside members. And then the audit committee chairman is typically the treasurer, and they would be the ones who typically report back to the organization's board. There is we found an audit committee self-assessment guide online, which we will share after the meeting when we send out the recording of this to everybody. We'll share with you a link to or a copy of the audit committee self-assessment guide. It's very comprehensive. It's not necessarily entirely for nonprofit organizations, but I think there's some good information within that guide that people can take and utilize effectively. So we want to thank you for your time and attention today. Let me see if we have any more questions. I don't see any questions or anything else in the chat. So thank you. We appreciate it. If you have any questions or you want to go over anything, feel free to reach out to either one of us. Don't forget that this was only the first of 3 in the Bootcamp series. So we have our second one again on Tuesday, April 13th, and our third one is Wednesday, May 5th. And we also have coming up on April 6th, we have a CARES Act update if anybody wants to participate, where we'll be discussing not just the typical stuff, but the whole forgiveness process and how that forgiveness interplays with the other funding sources that nonprofits have, how to utilize the resources effectively that you have in terms of HHS, PPP, ERTC, FEMA, and some of the others, uniform guidance audits and the like. So if anybody wants to participate, you can sign up for that too. If we have no other questions, let's see. Nope, doesn't look like we have any other questions. So I thank everybody for their time. We appreciate you being here. We appreciate you spending the hour with us. And again, this is a positive first step in terms of becoming a better audit committee member. And try to get, for you staff members who are here, try to get your audit committee members to come to the next meeting of this. I think it's important. So thanks a lot, everyone. And yes, it is acceptable for Finance and Audit Committee to be combined. But again, you have to have board members on that, and it has to be at least 3 board members, and only the board members are can be voting. All right, thanks, everyone. All right, take care.
Thank you, everyone.